Hi, Hayden.
Good morning. How are you?
Morning, guys.
How's
Yeah,
your week
pretty
going?
good. Yeah, so Wednesday, so I've finally got some time for trading. So
Yeah,
that's good. But
yeah,
I'm
well,
just looking at, now the German 40 is just heading straight up.
sure is. Sure is, all right. Look at that, just a blasting. 160 odd pips already. Sorry, 100 pips already. Just, wow. A lot of things are going. Gold's flying as well. We're peppering this level. We're at a bit of a range on the on gold. Like we've been stuck in this area for a bit now. Coming down, up, down, up, down, up, down. Now, are we going to break finally out of this area? Or is it going to reject again? We've got CPI today, so the day's finally here. Finally here. We've got, let's check the news. So UK had some pretty poor numbers. GDP for the last quarter is completely stagnated. Oh wait, sorry, that's month on month. The quarter it was 0.5%, so a little bit lower than expectations. The GDP year on year, a little bit lower. We've had some yen news as well, so yen's been fairly strong. Now, what am I missing? Oh, Forex Factory. So I wonder how the market's going to trade because this is a pivotal event. This whole CPI. So yeah, let's see what we get today. So we've had the pound news out now. It's given a bit of a rocket to the equities. We've got some Chinese news to come. Tentative, so it's odd. Not showing exactly what time it's going to come out. Maybe financial juice can give us more clarity. Nope, no clarity there. Doesn't even register on here. Okay, so yeah, yen's been flying. All right, so this is a German. Let's get some zones ready. So I never got up to this top bit, which I was hoping that would be able to execute on some sells from above here. The sells, in fact, just did indeed react from that danger area. So that was the target for those longs, or the target for my longs anyway, was this little zone.
Melinda explained why she decided to leave the foundation.
Over here. So we got some, Dave got some longs from here. I jumped in for some longs around about here somewhere. Price pushed up, took a little bit of profit. Price came down here, faked me out, eventually just closed it manually, which is a little bit annoying. And then price just shot up, and then as it was pushing up, and we had a little rejection from this area, and then we had this bullish candle, jumped back in for those longs for here, and then just targeted to the top of this imbalance candle right over here. That's what I thought. We might find we have a reaction from this point because that's liquidity in my eyes. We did have a reaction from there. We pushed back down, then we gave a nice little bullish candle, which probably trapped some new buyers into that. I reckon that would have been a bit of a buyer's trap. Pushed back up, and then it never was able to break through. We had some sellers come back in, broke through these little levels of support, came back in again, nice rejection wick, and then down she went. Down and down and down and down and down. We didn't quite see the same sort of New York session on NASDAQ. We did see the same recovery. Look at that, man. That was a crazy recovery. But yeah, apart from those little buys in London, my main trade was taking sells in New York session. And when we took the sells, this sell from here was pretty straightforward. A bit noisy and a bit choppy, but it was pretty straightforward from where it was reacting from. Here we are. So first time, you just got to think at that time, NYSE was coming out, and we've got a lovely area of 4-hour liquidity. Oh, look at that time. Double parked with coffees now. So as we pushed up yesterday on the back of NYSE volume, we pushed up into these wicks, into this liquidity zone, expecting the same sort of reaction. If we can actually close inside of here, we've got more upside. But for sure, what we got was a lovely reaction. First initial reaction from that level. Price pushed up, then clear target in mind was for price to come down to retest this little London consolidation before that move higher. Reacted from that 4-hour. I had an alert there, so that was my zone. I haven't got my zone drawn that clearly because it was just an alert. I was like, if it hits here, I'm in. So price pushed up, hit the entry, and then she just, a bit choppy for a while, which was a little annoying to watch. But eventually she dropped. She dropped big time. Pretty much it came all the way down to where London had executed their buys at this point. So any poor bastards that executed buys in London now have been taken out by New York, and then it just rose like a phoenix again. Now, overnight we had the US elections, presidential debate. We saw a little, what the hell is that? Where'd that come from? We had Asia sell off. Again, big moves again in Asia session. Almost 50% of this New York session, like over 100 pips in Asia. I must do some testing that when New York closes near like the top 10% or 20% of its high, I must have a look at the stats for how Asia performs, because Asia doesn't often break out from the New York high and New York low. So let's say, for example, we close near the low of the New York. So look at yesterday. The day before, we closed up near the high. Asia gapped up a little bit higher, but then we had a decent little retracement. The day before, we closed near the lows. Asia had a retracement. I'm going to ask my friend Makoda if we can put together a little bot to just do a little test that if New York session closes in the top X% of its own range, what's the likelihood that Asia has at least a 25 to 30% retracement? I must ask him to put that together. Because that could be
And you must chat to Pepperstone when you do that, because they're going to need to open their...
Oh, yeah, true. Yeah, true that. Yeah. We'll have to get some good quality data as well to test that on. But if we get that data and it shows that it's got a pretty good edge, that could become an easy EA. Just to see what kind of, I'm gonna see if I can chat with them today. Actually, I really have been wanting to put some trades on overnight. But I haven't been able to. I haven't been like I've wanted to, but I know that in the back of my mind somewhere, I'll wake up and I want to check how it's going. I've really got to make a conscious effort that when I go to sleep, I put my phone on the other side of the room. Otherwise, if it's within reaching distance, I'll just wake up. Oh, look at this thing. Hold on a second. Okay, sorry about that. Sarah will go into work early today, so I'll have a little mascot next to me sooner than later. Nish, welcome, mate. First stream. Adelaide, Michael, welcome. Where you guys been? Yeah, 9/11 today. I was thinking of that when I saw 11 September. I know exactly where I was when it happened. I can remember watching cartoons. Alright, so let's break down today. Where are some zones? We've got, let's clean some mess up. We've got a little bit of liquidity sitting right over here, which sparked the sell-off, which is what we're inside of right now. Okay, so we're inside of this little liquidity where price gathered itself and then we dropped. We made a new low. We broke out of the previous. This is the kind of move I was anticipating on Monday, when I was hoping that we were going to be pushing down. Actually, just one day late. Now above this area, the next liquidity area I see, it's not the best one, but we see a leg here. So obviously sells were executed from London yesterday. That was their agenda. And then they've gathered themselves with liquidity sitting here. So to me that is also an area where they've doubled down on those sells, and they're likely to protect this high with this level. So if this level is broken, then I don't see why we don't come and take out the high of London. So that's a potential trade idea for later. The concept of defending highs and lows, Nish, is 2 study sessions ago. I did put that in the email that I sent. But this is the high where London executed the most of their sells on, and this is their second batch of orders. So they're likely to defend this level. So we could see, if we could take this liquidity from New York, we'll see what happens here. But I would expect there to be maybe some reactions from here, unless we've just got so much bullish pressure. If we close inside of here, we can come and take out the highs, or like we can push up to this area, and we might see reactions above this zone. But if we get a second break above that area, then I think we're going for yesterday's London high. Maybe then we're going up to this daily target. But that's a long way to go for for London session. London session, potentially 120 pips range, that hopefully we drop down a little bit, and then that puts 120 pips. Yeah, if we retest Asia high and get there 120 pips, maybe that could be the range we trade with. Otherwise,
check a little bit below than that. There's a 15-minute imbalance just below the Asia high, and it's a twap point.
Say that again. There's a Asia just below the Asia high.
On the 15-minute.
Oh, 15.
On the 15-minute.
Yeah.
Euro left an imbalance.
Oh, this one right here.
Yeah, and I think that is also a twap point.
The twap.
Yeah.
Now, Do we have some zones up in here that could be targets?
Just on a higher time frame perspective, do you think that it could have already made or is making a significant daily higher low? As in, I go back to daily or up to daily.
Yeah, 1 second.
Because below the zone that it's made the new low at, there's just a very, very clean candle down. But the rest of that, the daily move up, has been all supported on the consolidation at the bottom of the zone that it hit last night. So I'm just wondering, could this be
On the daily?
maybe go to 4 hour, sorry.
4 hour?
So below the low it made last night, there's just this gigantic clean candle down.
Yeah.
And I'm just wondering, if you look back a bit, this yellow zone that it's tapped into is quite significant. So I'm wondering, I guess it depends. Does it depend much on CPI this afternoon? What it's gonna do from here? I mean, it's sort of made a double bottom on the 4 hour / daily or whatever at a significant zone above that clean candle in consolidation. Could this be like a lower high?
A low high here.
Yeah, the whole thing, like as in.
Yeah.
Back out.
This area would be.
1, 2, 1, 2.
Oh, I see. Oh, you mean a higher low? You mean higher low?
Sorry, high low.
Ah, yeah, okay.
Double bottom at this zone.
I don't think so. Hey,
And this.
it could be. It could be, but I'm more thinking CPI has more risk for downside than there is for upside from all scenarios. And I know CPI is going to affect the US markets, but it affects every market as well. The way I see it is there's 3 options. You've got one, inflation comes in higher than expected. That will lead to them feeling that let's check this, refresh this. So let's bring up this chart. So the market would like to see a 50 basis point cut. And this is on over here's 25 basis point cut. So you see how these odds have flipped again a little bit. That we were it was a couple of days ago was 70% and 30%. Then yesterday was 71%, and 29%. And then yesterday, now the odds have firmed a little bit towards the 50 basis point. If we stick to this path, there's more likely that we continue to see downside, because they'll feel that the Fed might be behind the not going to do enough quick enough to save a bit more, it'll be too restrictive.
Yeah.
It might push the US into recession. Now, that if inflation comes out higher than expected, they're still likely to cut by this amount next week, but it means that they might not be so aggressive for the next 2 meetings, which these next 2 meetings, the highest odds are 50 basis points each. So it might shift some of these down to 25, which will lead to a bit more downside in the markets. If inflation comes as expected, which is 0.2% for the month, and that will bring them year on year to 2.6%, what that will do is it will firm the odds for next week's cut by this again, which then again leads to the downside. If inflation comes in lower than this number and year on year comes in lower, say like 2.4%, for example, then what that will do is it will increase the odds of a 50 basis points, but it will introduce fear that, wait, if we're cutting by 50 basis points, what are they not telling us? Maybe when they've, in the last 30 years, the 2 times or 3 times that they've done their first rate cut by 50 basis points has confirmed a recession. So if there's recession fears, then that again brings the market to the down, doesn't it?
Yeah.
So all three, I feel like there's more risk of market going down. Not that I want to like put all my eggs in that basket. I think it'll be volatile regardless, but I do think that bottom feeders that want to get a good price would like to live a little bit lower than here. So we might get like just whipsaw, but I do think before any sustained higher low is probably going to come from probably a little bit lower. But this is a good level, and then I would actually like to trade in this area. It's nice when we've got some clean candles.
Well, we're clean on both legs, down and up in the same zone.
Yeah, because this bit here is always, they gave us so much problems trading in here, and then again over here was a little bit difficult, and now we're back in the zone again.
Like here and here,
Yeah,
both clean.
yeah. So that would be nice. So
Could that even happen today? Could it even swing up a bit in New York?
yeah, it could. Yeah, it could.
It could take a poo and drop.
Could take a poo. Yeah, come up, take that poo, and then
Just take a dump.
yeah.
In.
We've got a trend line developing. So let's see if it pushes up into that area, which would pretty much line up with the two poos. So let's see if we can get some momentum. We're already sort of like testing this area, so we're having a nice little reaction because this is the last little area of supply that led to some market damage where we broke through and made a new low, pushed up, made a new high. We've got liquidity above this here. This high didn't lead to new lows, so that makes that high insignificant. We've got a low here. Trading below this low could be pretty nice down to the low, but hopefully we go up, take a poo, and then drop. Yeah, let's hope they get something like that. So hopefully it can push down a little bit. Maybe takes that imbalance that Paul pointed out on the 15-minute. That's somewhere around here. That lines up with a little bit of an Asia. Pretty. I wouldn't put much on this consolidation just because of the time of day. Pretty quiet time for price to be gathering any sort of liquidity. So I say this is just quiet market. But this area is pretty decent.
Well, you know what you say after bullish candle closes like the previous one at the top.
No top wick. There's often a red candle. Often. So let's recycle this. Let's mark this level up. We'll just grab these wicks. Go down 15-minute. Yeah, we caught them. So yeah, if it could take that out and then show some sort of support along here, then I think there could be a chance we push higher. What's uncomfortable is that we opened here and we're here now. Will London just go straight up? I think it could, but I hope it doesn't. But this is my target. I really want to see, not just because of the poo levels, but the MMGs are up here, but it's mainly we've got London liquidity. I think that's just such an attractive place to create a high for the day, or even higher, but to fund some of those sells, I think we need liquidity, and I'd like to see it take out that London session. So that's what I'm kind of anticipating today, to push up to here. We might, if we push up to here, and if the momentum really does kick in, we could overshoot it. But my plan is just to trade to here. If we show rejections and price starting to break down from here, then yeah, I would happily take a sell. Maybe a sell, maybe not to correct the whole move, but at least to have a reaction. And that would be even a 50 pip move would be from here down to here. So let's load the guns.
Is your new rifle ready, Dave?
How are you rocking?
Yeah.
New
Did you get
stage 2 rifle?
Oh,
Yeah. The double barrel.
I'm actually going to load up the other one, so I got 2 going on at the same time. Double barrel.
You copy trading across your portfolio now.
That's it, mate. 2 $200,000 accounts. Bam, bam.
Hayden, the bottom of that 15-minute, it's the bottom of a nice little liquidity zone on trendline liquidity on the 1 minute as well. Could be a really nice buy position.
Say which zone again?
Yeah, there you can see it. There's some trendline liquidity down to the bottom of the 15-minute. If you put it on the 1 minute, right into that zone.
Can you draw your trend line?
How do I do that?
Grab where you got like the pencil. You can grab a line. If you click on the pencil, it gives you more options. There's like squares, lines, arrows.
Are we going to miss the open now if I start drawing?
Okay.
Just that blue zone that you got there is, I was just saying that that rally up to
This little
the
bit
top,
here.
that you have all of that. We get to the bottom of that blue zone, we've taken out all that liquidity.
Oh, you're saying about here.
Yeah.
Well, it looks
That
like
kind
look at this.
liquidity.
The 2 minutes before they open, we're starting to push price back in. We've got a little 1 minute structure across here. Little tiny 1 minutes.
You'll have to teach me how to draw when we got a minute.
Yeah. All right, here we go. Here we go. %50 of euro. It's just below here. Can we get a wick down into that and then propel us higher? Alright, magazine, yeah. Cartoon do you want? Up to the poo and beyond. All right, so come on. So looking for it to go from where it's at. I'm not sure if that's the low of London. Started with no bottom wick. So I wonder if we can computer's running very hot.
Where it dipped into is actually quite a nice zone back from the Asian session. There was a broken 5 minute short HCS that took it down from the consolidation. Quite nice zone. So that imbalance, that 5-minute imbalance, would be plumb in the middle of the zone that I've drawn. So just below where it is now.
Yeah.
It's right in the middle of that zone that we've got drawn. It's actually very nice. But of course, I wait for it to take the imbalance and it won't.
Yeah. Hey, Ive, how are you? How did Naz respond to the open? Nope, nothing. What about France 40?
They've all done nothing this morning.
Oh, France 40.
A little bit. Yeah, a little
France
bit.
has pushed. We've got a little no wick candle here.
And it seems to be taking the lead at the moment, the French.
It has, hasn't it?
Yeah.
Come on, close inside of here.
Oh, yes. It is. Yep.
And the 5-minute bounce nicely off the 20 EMA as well.
Ooh, 20 bounce.
Yeah.
Yeah, baby.
You had to take it without the bullish engulfing though.
Come on, push. What an IP.
I should go and push it now.
Yeah, go on, get up there.
You want to get in at the open?
I missed the jump. I was trying to put Maddie's cartoon on, and when when I looked, no, it came down and it gave us a chance. But when it would have been nice to sort of have that 20 pips of the initial burst.
You can only blame Maddie for so long, you know that.
I can't. Mine. Funny, I still blame her.
Good point. Think about that. It's actually at school, unfortunately.
My Maddie's in bed.
Okay, come on.
She's gonna be asking for magic keys for Christmas.
There, can imagine that.
She's not going to ask for it, she's just going to get given it.
Yeah, I was just going to say that.
She likes buttons. She already she
ripped them
just
off.
yeah, she took a bit of the power button off the TV remote yesterday.
Good girl.
Have we got GBP news today?
I had an hour ago.
Oh, was it any good?
No, it was under expectations.
Mm.
So GDP came in month on month, came in low. For the quarter, was about 0.2% lower.
Oh.
But the pound's been strong
stagnating
recently.
quarter. Yeah, it has. Really has.
Is there some kind of contradiction there, or is it just that it's now going to start weakening just because all its metrics don't look great, right?
Yeah, that's right. So maybe it could start weakening. It's been strong for quite a bit, but institutional positioning is still pretty bullish on pound. It's been stagnating for a long time though.
I mean, before it became more bullish, or just
Yeah. So, but the interest rates are still pretty high, and the Bank of England have been pretty hawkish that they're holding rates where they are at the moment. Inflation's still pretty high.
No, thank you. Oh.
All right, what a slow start, huh? We had a move up, move down, move up, and now slowing down, gathering themselves. So where are they going to take it? I'm uncomfortable. Well, I'm more comfortable that we've had two quite strong candles here, but that's on the 1 minutes chart. I'm not really that comfortable with this being the potential low of London. I would feel more comfortable seeing reaction from this area, but I don't want price to sit in this area long enough, because then if we start breaking down, we can start getting momentum to the downside, and I don't want that momentum to the downside, because I like the sells, but I don't like the sells from here.
this could be this could be low high. It could be getting down here if we're going up.
Could be, yeah.
I'm worried that this is low high.
I just gotta wait for the first 15 to close. Okay. Come on. That's it. Come on. Once we can clear these levels, I feel much more comfortable to take out that high, and then I feel momentum will kick in.
Did you get back in? Or did you get in when it returned back to that level?
I did, yeah. No, I was in. What I said was, is it when I wanted to take that initial move, but it moved too quick. But then when it came down, it gave that chance to get back in.
Yeah.
So I've been in it since here.
Yeah.
I'll consider scaling in if we can clear up here. Pretty dangerous scaling in so early, but I feel it could be a fast move up. Come on, just want to see this breakers up here. I mean, the difference between getting in here or getting in here is a bit insignificant, isn't it? Like, I don't like getting in a bad position, but I'd hate missing it for the sake of that.
Yeah, like yesterday.
Yeah,
You
like
had a
yesterday.
pending
Yeah.
order. Your pending order was just a little bit too low yesterday.
Yeah, it was. Yeah.
It's funny, isn't it? The more you watch this session, or the more you're involved in it, the similar plays happen.
Oh yeah, 100%. And the market's been so fantastic lately.
Yeah. Because even if you miss it, as you say, it seems to play about in that area for however long.
Yeah.
It's just having that confidence to go again.
Yeah. Let's see what this next 15-minute candle where this one can close. Come on. Okay, we're closed. Just sideways again. Still going up and down. Did gold take a new high? No, not quite. So you can tell this is a good level because it's trying to chip away at it. But is it going to need a run up to break it, given that it's been working its way at it for a while? Come on. Yeah. I'll scale some at this point, because I am worried about just above here. Come on, 10 more. Reducing risk anyway, either way, because from the open to where we're at is 50 pips. Exactly. So I don't want to see 50 pips turn around and become 0 pips, or even worse, losing pips.
Minus 10.
Minus 10, yeah. Watch this stream. I'll show you how to turn 50 pips into negative 20.
I think that's that other group that we know.
Yeah, watch me take $1 million account down to 0.
We'll even give you an award to put on your wall to prove it when you do it.
Yeah, that blue entry dot is this. It's sitting at the point where Haydos needs to scale out.
Yeah, that's it. Yeah, buy here. Well, we're getting into the edges of this area, so this is arguably the top end, and maybe my box is a little bit big, but because it's sort of, we just need momentum to kick in now. Hopefully we don't get any nasty business. Hopefully we can give this a second go. I'll probably actually scale out if we can retest this high of this wick. Take some profits here. I think we would push through, but I don't want to, because I still feel like there's quite a lot of downside risk, and London has taken out the highs. Now, I'd love it to get there, but I also am quite aware that this level can pose quite a bit of a problem, and we are seeing like already a 30 pip reaction from that level. Oh man. Ah, shoot. Well, that took out my scaling when we were breaking up. I did scale in, moved to break even, and that wick down came back. Oh, just clean me up, bastard. Anyway, I've got the lower position running, so that's the main one. Come on. Second batch of orders. As long as we can hold this support, as long as we can hold this, I'm happy. Yeah, I probably should have actually. Oh, that's all right. If it just keeps on going up, that's fine. But I guess maybe that was a little bit of an oversight, because this actually stands out now on the 15-minute, doesn't it? Like these necklines, like across here. See our price made a little support, little high, and then it dropped from this level. So that's a sensitive. That's probably that's the more sensitive zone for
Also confluence of about 3 or 4 different session lows and highs. Well, that area. Previous on Monday's New York low, Monday's London low, Monday's Asian high, Euro 50% Monday.
right.
Quite a few. Yeah.
Yeah. So that's that was a little mistake I made for the scale and entry, because the scale and entry, when you're entering into the move, those pullbacks are dangerous. So I probably shouldn't have, like when it moved up, I was like, I wanted to take some profits a little bit higher, but I didn't want to have any risk on that scale in. So I moved the scale in to break even pretty quickly, but I should have actually taken some profits at this level, but I just didn't have it marked. But that would have been a good level to take some risk out of that scaling opportunity. Because once you, yeah, that's all right. But yeah, you see how that it's amazing when you do see a high, like a point where the price sort of has a reaction, and then to train your eye, go and investigate what it was reacting from. Because obviously it picked up a little pocket of sellers, or a little pocket where it was able to take some profits, and you can see this level quite clearly stands out now in the 15-minute, just because you've got a lot of, like, over a period of from, yeah, for like 6 hours from London Open to just before New York Stock Exchange Open, we had price return to this little zone a number of times. So apologies about that, bit of an oversight on my side. Or even on 30 minutes, even clearer. Yeah, you see the confluence of things at that area. 50% Euro, Asian high, London low, New York low, neckline, some rejection wicks. That's alright. We know markets move. Well, not exactly like that. They'll move like kind of like this, won't they? So as long as that support holds again, long as it'd be nice if that holds for the initial position, but even if it comes down, I think this zone is also very much of interest. That I think that if we just push and push and push and push, I think there's a very high chance that we come and collect this level later. Maybe what'll be worst case is if we just push and push and push and then a CPI comes out that gives you like a nasty wick down and reacts from that zone. Anyway. Are you guys holding a position in here somewhere still?
No, I didn't enter.
Stick true to your plan. That's the discipline. What do you say, Paul?
I got taken out like you.
Okay. Anyone
Just
else?
I'm just watching the 1 minute now.
I'm still hanging in there.
Good one, yeah.
That lower trend line, if it breaks, then maybe we are going a bit low.
Lots of lovely zones down lower. Sort of where your line's going, where your zone.
In here.
Got various points of interest in there, looking at particular places and confluence of a trend line. So that's where I'm hoping for it to come down to.
Mm-hmm. This was a sell zone for us, not going convincingly either direction. Oh, there's a sell zone. Yeah, for sure for reactions. Yeah, definitely 100%. Just depends on like how big that sell zone, like the reaction you expect from here. But like, definitely I saw this as an area where price can have a reaction from. How big that reaction is, whether it's enough to get sells, or but this is definitely liquidity. Okay, that's
5 minutes really struggling to close above this level.
keep talking. It's working.
Yeah.
Oh, my coffee's here. Jesus, forgot about it. Cold now. All right, 90 seconds left. Love this to close above these wicks. Because I think if this candle here can close above these wicks, what we've got is a decent little confirmation of support for now.
Oh, that's hilarious. Hey, you know, how we were talking last night, Hayden, about lot sizes with my with Alpha.
Yeah.
And, I'd set a trap exit play on Hong Kong 50 at a very specific point, and I'm now triumphantly up 34 cents.
How many lots?
0.01 somehow.
Oh, 0.01. Oh, okay.
I thought I tried to maximize my lots on that one too.
Oh,
No, sorry, 21 cents.
oh, holy, wow.
I know.
Did you put the trade on oil?
No, I didn't. I just happened. Oh no, but I wasn't. No, that was already. That had already been in the zone I wanted to.
Oh no, I mean, did you put the pending order on just to see what it was?
No.
Does anyone who here trades oil and on Alpha? Oh, you probably
Sarah's.
can't, but there's yeah. I don't think Sarah's with Alpha though. Does anyone? Nope. So what Dave and I were trying to figure out was on MetaTrader with Alpha, the way that they've got oil set is that your max size you can put on any trade is 100 lots. So 100 lots. I mean that's the max you can put on any position, but we know that each lot for different things is different. So one lot of gold is $10 a pip. For equities, for they get the same size, same dollar amount for pips, you need to put on 10 lots. For oil, it looks like you need to put on 100 pips. 100 lots. 100 lots is worth $10 a pip for oil on Alpha on MetaTrader. So you effectively can't trade it. Just open up 100 lot trade. Can you imagine that? You feel like a baller.
Yeah, you tell all your mates. Yeah, I just took another 100 lot trade this morning. Right?
Yeah, I just stacked a few hundreds together.
Made 85 cents. Yeah.
Yeah.
Yeah, I think I worked out that massive I could make a few $100 on a $200,000 account.
Yeah. All right, come on, grinding higher. Cole, I got your message. Thank you. A suggestion. Did you want to? Have you got a self-managed super, do you?
Yeah, sure. Yeah, so I was just thinking when I become good at this, I wouldn't mind trading in my super fund as well.
Super low risk, hey. Just with yeah, okay. We'll talk about some longer term trades. But still be very careful with super.
Yeah, sure, mate. I've got it all set up now. I've got a Saxo account where all my shares are in there, and
Oh yeah.
all I've got to do, I think I've got to go to the tax department, the ATO, and get a LEA code or something. Once I've got the LEA code, then I can trade currencies and CFDs.
Yeah. Yeah, my brother's done the same with his.
You can day trade on your super account.
Certain you get it set up, but it's it's bloody risky, man, to do that.
Yeah, but your super's going to die a slow death anyway.
It will. But same thing. Like I'm always get nervous with anything to do with my super.
At least you can pay your tax out of your super then. If all your growth is on your super account, then you just sign over the tax payments there. It's like that.
Yeah, the thing is that you don't need a lot to trade with to get good returns. So I think risking like large chunks of is risky on anything, because you don't need to risk a lot. Like, trading is such a speculative nature that, like, I've got my investment side of things, and I've got my like my super, which I maximize every year, but I keep it all fairly separate and safe. And then all this trading, whatever I make from trading and scaling and personal accounts and prop accounts and stuff, I pump into my super for the tax breaks. But I guess once you get to an age where the tax breaks aren't as, like, they're not worth as much anymore, probably it's still safe, because like that's the money you can't afford to lose. And with trading, you've got to, even when you get, like, you just don't know if that black swan event can really wipe things out. So it's really good to be diversified, and having too much stuff in one area where you're trading is highly dangerous in my eyes.
Yeah, if I did trade, I'd be using very, very small amounts, like,
Yeah.
I don't know, 0.2%, maybe even less. It's just very small amounts, just something to tick over, that's all.
Yeah, no, I get it. Yeah. I get it, because, like, on my personal account, it's kind of annoys me when, like with as long as you trust the prop accounts to pay out, it's nice trading knowing that you don't have your money at danger. As in, like, on my personal account, I don't keep a whole lot in my personal account, because it's not so much about, I don't have risk percentages I need to follow. It's like, if I take a 5% loss in a day on a personal account, I'm not going to lose my account, you know what I mean? But it's like, whatever I keep in my trading account isn't necessarily like 100% of what I have, so I can always top it up if I want to. So I can use higher risk than I'd think is for me. I'm risking dollars per trade, and I'm happy with what I'm risking is in terms of, like, in case I take a loss. It doesn't make sense for me to risk 1% or 2% of my personal account if I'm only keeping a small amount in there. But then when I was trading, like when I started, I was like so proud that I built my personal account up. Like I grew it and grew it and grew it. I didn't want to withdraw, and I got it over like my target. And then I just couldn't withdraw. I just felt like, why am I withdrawing it? Because anything that's over a certain amount, if I withdrew it, it just sat in my bank account. And I was like, what? Just kind of not doing anything there. And this is when interest rates are super low as well. So like, why would I just take it out of my trading account? Why wouldn't I just scale? But then I found when I was scaling, I was getting really nervous about some of the dollar amounts. So I didn't really know what to do with the money that was in the trading account. You know what I mean? So then when, you know, we bought the house and we were like saving up for all these different things and putting money aside for Maddie and investing and stuff, I felt it's kind of pointless having money in my personal account, like a huge chunk, when I could be putting that money to work. Like I could be putting money into investments. I have my emergency fund. I've got all these other things. Where with prop firms now, it's like you get, you know, $150,000 of prop funding, and if you're making, you know, if you can make like 5%, 10% over a course of like a couple of months, that's pretty good money. And it's not like you're having like 100,000 of your own money just sitting there, not earning interest, not being invested, not being put to work. So that's why I like having my personal account is quite small in comparison, because I can risk, you know, I can risk $500 a trade, $1,000 a trade, and the long as I'm not hitting my margin requirements, if I lose a couple trades, I don't have to size down. I can just top up if I want to keep it a certain amount, and if it goes over a certain amount, I just withdraw it, put that money to work. I don't need to have 6 figures in a personal account, and I would never do that ever again, because you get that false sense of security. Where I just made some dumb decisions when I had, you know, a fair bit in my personal account, and like when you look back, you're like, that's money, that's hard-earned money that you just lose if you do make some dumb decisions, or you just F up on, like on German. I don't think there's much of a risk, but when I was trading gold, you can get some nasty moves, man, real nasty spikes. And that's once you've got enough in your account and you think, yeah, I'm happy just to cut the loss if it's going against you. It's not that when you just take a loss is, oh, I just lost, you know, 1,000 or 2,000. It's the loss that affects you, and you're like, I've got to get that money back, or you just like you're sort of pissed off because of some mistake, or like what's worse is when you get to a trade and then you get like a spike down and then it goes straight up, and you're like, that bastard like minute just took me out. You took that loss, and then you're emotionally on tilt, and then you're not really trading that well, and then you're probably not trading that well for like maybe a day or two afterwards as well, and it's because of the size that you lost. So that's why I'm not really too keen on having money that I really need, and that would be what's in my super. If I'm trading my super and I take a loss like for some uncontrolled reason, a market spike or something, that's money that would really affect me emotionally if I lost it, or lost like a chunk of it. So whatever my trading account, I've got to consider that at any moment I don't want to lose it, but I could lose it. And am I okay with losing it? No, I'm not okay with losing it, but it's not going to actually affect me at all. You know what I mean?
Yeah, so what you reckon, a prop account, use the prop account, then just invest the money up from the prop account back into the super fund?
Well, that's what I do. Yeah, like all my trading is I consider my investments as something I mean, it depends on what stage of life you're at as well. Like for me, I can't access my super for a long time. So what I'm trying to use is maximizing at least as much of the tax breaks that I can get from investing into the super with money that I don't need for many years. So I maximize that. as much as I can, and then all the extra stuff that I get, I invest into something I'm willing to hold for a long time. So like the different ETFs, some little cryptos, some gold, just diversifying personally into different investments, because I know if I hold those long enough in this is for like Australia, is that if I hold it over 12 months, I'm going to get that 50% capital gains tax discount, so that when I'm actually not earning money, when I'm not earning an income from trading or from other things that I do, when I'm not earning anything, then I can start to slowly cash in some of those investments, take the capital gains off, the discount off, and actually live off that money. So everything I'm trying to invest now is just into money that I can, when I'm not working, when I don't have a steady income from trading or whatever, I'm just living off what I've made. That's when I want to try have all my, a roof over my head, investments all sort of ticking away, but then being able to live off, say, 60, 50, 60, 70,000, whatever the inflation is going to be at that time, but whatever I can like withdraw from my investments, minimize as much tax as I need to pay, but then also not really touch my retirement fund. So and the way for me to invest as much as I can into, there's no reason for me just to withdraw. I've got my emergency fund. No reason for me to withdraw from my trading account just to sit in my bank account, because it's just sitting there, and like, it gains interest, but then I've got to declare interest on my tax income, so I'm getting taxed like 50% of it anyway. So I'd rather put that money to work in investments that I'm hoping are going to grow over time. I mean, if you're in different countries, it's... Sorry, go on.
I'm already retired anyway, so
yeah, it's a different stage now.
To live off, yeah.
So, because having been retired now, you don't have your super in like risky assets. It'd probably be in much more safer assets. So it's probably not growing above inflation at the moment. So I guess that's why you want to tick it along as well. Which is then it's a different game.
I was only going to take a partial amount of it and just invest that and see how I go.
Yeah, I'd feel more comfortable because you don't have. There's no penalty to withdraw from it, is there?
I don't know. Yeah, most I pay is 15% tax on it as well.
Yeah, that's the good thing, is the tax is the minimum. Yeah, kind of rather than trading super, it'd be kind of what I'd say is potentially if there's no you got to speak to an accountant, that's for sure. I can get in trouble for saying things like this. But it would be to if there's no harm taking it out, is like just segregate it somehow, so that if there is like a black swan event, then it doesn't affect other monies, because potentially some of the risks of trading is going into negative account balance where you owe the broker, and it's highly unlikely that you get this black swan event. But having money in a broker, at least you get negative account balance. So let's say you just F up royally and you get a massive spike and your account goes in the negative, you don't need to pay that back in Australia under Australian regulations, unless you've got a pro account. If you've got a pro account, then you're waiving that right. We'll talk about it later off air.
Yeah, sure, mate. Thank you for that.
You're welcome. But I know what you mean. But I'll get more information from you. Prop firm from Des. Yeah, I've been using Alpha. Used a few, so Alpha I've been mostly happy with.
Have you ever used 5%ers?
No, I haven't. I stayed away from them for a long time because of their they had such a low leverage, and the profit split wasn't very good. But they've been around forever. Now they've got some new programs. I was speaking to someone else about this in the last 2 weeks. It came up, and they were saying that they've got some new programs which seem pretty reasonable. I feel like all the prop firms, though, what you want to try to do is bleed them as much as you can while they're going to be around. I'm not sure what's going to be the future of them, but I've had prop accounts and they come and go. Hey,
But they reckon with the 5% is they've got one there where you can you buy into it and then you're not rushed. You haven't got a month to make a certain amount. If they want you to qualify for go make 6 or 10% of the account, they give you forever. You don't have to do it in a month or 2 months or 3 months. You can take your time. You can take a year to do it if you want to.
Yeah, most of them do that now. Well, most of the good ones anyway. They've removed that time limit.
Okay.
Yeah, you just got to watch for their rules. One they're changing their rules often. It's a bit annoying. Like, the ones that have introduced consistency rules and this other stuff. Like, the way I see it is that money in, like what you pay versus how much you return from them. Like, if you take a challenge, you pass it, even if you make 1% back, you get paid out. You've sort of covered your fee. And then anything, if you can just keep on getting a few payouts before you lose it, then that's great. Just you've proved that you can be consistent. Then just start going again. Because what happened, the one thing is with prop accounts is that when you request a payout, it can take days. So what are you going to do when you're waiting for that? And that's where it's good to have a few. So one mistake I made with Alpha was I had 3 on the run, 3 prop accounts on the run, and a couple with some other firms as well. But one thing I did with Alpha was I requested a payout, and it was around about 8 or 9% that I requested, and it was taking a while. It took 4 to 5 days before they were paying out. In the meantime, I was just trading the other account. But what I'd done is when I was, I've said this before, when I was trading, I was a little bit lazy when I was trading gold because I was trading gold in indices, and I went from trading indices to trade gold, and I put on a trade. I put on a 5-lot trade on gold, which is a lot. So as soon as I realized that mistake, I closed it, and kind of just shocked because I have lost accounts before when I put on a trade thinking the size I put on was okay for indices, but when you go from indices to gold, that's 10 times bigger. So luckily I keep my risk fairly small, somewhere in the region of 0.5%, a little bit less. But that would be the equivalent of open up a 5% risk trade on a prop firm. So as soon as I realized I made the mistake, I closed it. And then just to stop me making that mistake, what I did was I was trading gold, and then I was trading gold. Say I was going back trading gold at one lot, and then when I went to indices, I just put on multiple positions. I just went, one. I just hit buy, multiple times. Went buy, and had 4 entries in one spot, rather than just changing my lot size to 4 lot and then putting it on. So that all makes sort of reasonable sense. And then I was like, oh, this is actually pretty handy, because then I could have take profit 1, take profit 2, take profit 3, and whatnot. But then when price was moving up once pretty nicely, and what I just did was close all, and it closed all 4 trades straight away. And that was a rule that I broke. I didn't realize. So they said it's called spam in the order book when you open or close trades more than 2 in less than a second. And because I did that on my on the prop account, on that 9% that I'd made, that I requested a payout from, they said that is that, you know, you've spammed the order book, that's a legal trading strategy, and we're closing your account. So they denied the payout. And then I was like, oh, that means my second account's screwed as well because I did the bloody same thing. But I didn't know that was a rule because it took 5 days for me to get that payout. So
that's crazy.
Yeah, so I lost 2 accounts within like a week because of that rule. So, you know, it's annoying because then you've got to go through and do the evaluation step again. But in the end, I was like, well, on both of those accounts, it was my 4th payout from each one of them. So I've easily made back the money that I invested initially from that and more. So it was just, okay, I'd have to be careful then on the last remaining account I've got with them, and then just double check if that rule was on the other prop accounts as well that I hold. Because what I do, I don't use a trade copier to copy trades across everything. If I did, I would have effed everything. But on these ones, what I do is like I'll build one up, and then when that one's up, I'll go to the next one, build that one up, go to the next one, build that one up, go to the next one, build that one up. And often, like, whatever I do, like the trades I've taken here today on this one is on one account, and New York session will be a different account. So I'm kind of just like trading all of them at once, just in case I make like one bad mistake. I don't want to like ruin all my accounts. So you can't use magic keys. No, you can use magic keys to close trades. The problem was that I entered like 4 trades at once, and then I closed all those 4 trades at once. So now what I do is I just close them one by one. So I'll still enter like multiple positions. Let's say like I've entered, let's say for example, what I'd done on NASDAQ the other day. I'll just use yesterday for example because it was something similar. Was that I had a trade on NAS here that came down, price came up, I took another sell, price came down, I took some partials like at these levels, price came up, I had a little bit of drawdown, and then entered more sells, and then price came down. But then when it was getting close to my target, what I started doing was just, I didn't close all because I'd entered 4 positions in by that stage, so I didn't want to close all at the same time. So I started closing one by one, making sure I waited like a couple seconds between doing that. So it was kind of annoying because as soon as you close, like it bounces up, close the next one, goes down a little bit, close the next one, goes up again, close the next one. So you're not getting like the exact price because you're taking time to close. It is a bit annoying, but it's just to make sure that I don't break that rule. Oh, 50% on all trades? No, I don't think so. I don't think partials makes a difference. But it's just something you've got to be careful, hey, because these guys, as long as you're trading, as long as it's not a book. If it's not a book, you've got to just be cautious because you're taken away from their bottom line, really. And then that's the nice thing about your personal account, is that my personal account, I do like trading it because I keep 100% of everything. I don't have to worry about all these like little rules and all this kind of stuff. But I also don't like having, 50 grand sitting in that account doing nothing. I really want that money to be working.
What do you go for on the evaluations, Hayden? Do you take the 2-step option or?
Yeah, I've always done the 2-step. Because to get 2-step where it's like 8% and 5%, or 1-step which is 10% or whatever it is.
Yeah, and then you get the trading.
But it's a lot more as well. I just don't see the difference between 10% and 13%. It's not, to me, that extra 3% might be that's not that much. Oh, so yeah, in my opinion, Top Step. Oh yeah, a lot of people have been trading Top Step. Sarah as well trades Top Step.
I'm on Top Step.
Yeah. I think I'm gonna look at these. The one thing I just need to be, for me, why at the moment I feel with the amount of prop firms that I've got going, when I start using the copy trader and linking a few of them, I'll probably add a few more. But because there's the inactivity rule as well. I don't want to forget that I've got an account and not trade it for like 30 days and lose it. But yeah, Top Step's futures. Yeah, I need to get my head around futures first.
It's different because when you're scaling, you get an average price.
Yeah. I'm gonna have a look at it. You're hungry, I know. Okay, I'm gonna have to go. All right. Well, pretty non-eventful. We've only got a 50 pip range, so 50 pips. So bit of a shame. We got some momentum to the upside. We've got such a big event, so that's why I think we've got less volume. Maybe we'll birth some new volume once Asia closes. Where we reacted from, the upside made sense for sure, but then also it made sense why we're getting some hesitation here with a potentially low volume day with CPI. Oh, sorry, your cartoon finished. I'm sorry. My bad. Been a bad dad. I'm gonna have to run. I'm gonna feed my daughter. All right, guys. Well, thanks for being here. Appreciate this. It's been a slow day, slow morning. Hopefully we get some volume kicking later on. Be careful with CPI. It's going to be a bloody wild event. But I'm expecting downside, but we'll see. We'll see what happens as well. Post news, post how the market reacts. Alrighty. Well, I'll see you tomorrow, bright and early.
Okay, thanks, Aidan.
Yeah, cheers. Thanks, Aidan. See you tomorrow.
Sorry about the early stop. You can hear in the background.
Anyway.
Yeah.
No worries.
Alright, guys. I'll see you tomorrow.
Yeah.